If you were to look out 10 years from now, are we going to consume more oil or less oil than today?
This year, we're going to consume between 104.8 to 105.0 million barrels. That's
Mhm.
up from 103.8 in 2024. See, we're growing by a million to a million, 2 million, 3, depending upon economic success around the world, global trade, and
Yes.
other things. So we're going to probably consume 115 to 118 10 years from now, but it'll be lower in the OECD because of environmental issues, because of EVs and all the rest of it. But in the developed world, where we need the nickel, we need copper, we need lithium, we need grain, we're going to need so many things that Africa, South America, parts of Asia are going to provide for the needs of the rising economic demand from people all around the world. And the people are going to be in the copper mines and copper smelters and nickel, lithium, all of that. They're going to want a decent quality of life as well. They're going to consume more energy, both for electricity in the house, driving vehicles instead of bikes or motorbikes. So all of that creates that incremental demand, and the non-OECD is going to be the driver of it. And that's what's happening this year. And I think that we're going to see more of that as you head into that 10-year.
The energy markets are absolutely fascinating these days. Well, for the number of years, actually, on that score, whether we're talking natural gas, we could be talking uranium, big favorite here at Money Talks, of course. But I've got Joseph Schachter here, SchachterEnergyReport.ca. Joseph, first of all, thank you for taking the time. And in knowing that you were coming on with us, I was going back to the World Outlook Conference and looking at what you said there in the first week of February. And I got to say, it has worked out. I'm a bottom line kind of person. It has really worked out. You said you will give what you call a table pounding buy. You did that. I think it was in April. And we've seen some excellent returns, both natural gas, some of the oil plays, et cetera. So I want to first of all, congratulate you, but get a bit of an update on those things.
Yeah, when we got together in February at the World Outlook in this year, I was watching the U.S. and the China data, and it was showing that inventories were building and that the demand was beginning to weaken. And so, as those inventories built, we saw the price of oil go from $79 as we opened the year down to that 56 level in April. And I watched three things: the economic value of oil. So if it gets to a price that's so low that the economics don't work, and at 56 they do not work. Second was the S&P TSX Energy Index. It started the year around 288 and it got down to 214, down 26%. So again, April gave you that table pounding buy. So we sent out an action alert with a table pounding buy saying to buy the stocks, and just going through a few names that we all familiar that come to the World Outlook Financial Conference and then have been with talking to investors, individual investors, and focus their IR on individual investors. In Play Oil, Doug Bartoli.
Yeah,
If you
Doug.
remember, he did that deal with Obsidian. At the bottom in April, May, it was $6.26, and it was $12.77. So it's up 103%. Plus, you got a monthly dividend, which was over 10% yield at the time. So, like it was a 12% yield. Hemisphere, Don Simmons, a regular at the conference, his stock was $1.52, and now it's $2.13, so up 40%, plus again a dividend that was very generous. Remember, he does regulars and he does specials. Yeah. All of that together was very attractive. Petrus Resources, another regular at the conference, was $1.12, and it was $1.58 yesterday when I pulled out the chart. So up 42%, plus a double-digit yield. And I'll give you two more. Surge Energy, Paul Coburn, a regular at the conference. Stock was at 422, was a high of 770, up 70%, plus a dividend. And then Total Energy, Dan Halleck, again, a service stock, drilling, compression, rentals, all of that. Stock was down at 832, and it's $14, so it's up 70% plus a modest dividend. So even though golds have been spectacular and uranium and copper, and the oils haven't been so bad. They've been pretty good if you know when to take advantage of the markets when they get overbought and oversold. Right now we're a bit overbought. I think during Q4, November, December, we will see another buy signal, and I think we'll see below $60 WTI, 56 to 59. I've been writing about that for a while,
Yes.
but I've been saying to people, here's what's going on in the companies. Get your buy list ready. Another buy signal will probably come during Q4.
I like a couple of things you're saying there. One is that, the broad timing is important. As you've just alluded to, if you're a buyer, you made it very clear. April was your buy point. You said it in advance. It happened. But and I also like to get your buy list ready, so you're not reactionary in the market. You get a group of stocks. You say, all I just want to do is, like, you've been waiting to buy that new car, and you're waiting for it to go on sale. So you're waiting for some companies that you've done some work on, or you've read the Schachter Energy Report and you've liked what you've read there on a particular company. And again, I like the idea of having a buy list ready. So when the market has a reaction, as you say, you're looking for a crude under 60, under $60 for WTI. Well, then you're kind of ready. Let's see how the market's reacted to that. So yeah, I think that's very sage advice. But the other thing you said is, hey, you're expecting to have another pounding table buy once you get that WTI down low, down below 60. You'll be looking in the market and you'll let your subscribers know.
Yeah. And right now, some of these companies are still yielding 7 or 8%. But if the market pulls back, they could get to double digits, which would be nice to have income every month
Yes.
or every quarter. And then, of course, having capital gains. So there's a whole list of companies that we cover, from the royalty companies, like Topaz and Freehold. So you're trying to get a nice 5 to 6% yield. Plus, if the stock goes up 10%, if you buy it at the right time, that's a nice return in a very conservative name. But then you can have companies that are focused on growth. You can have companies that are growth and dividend, like a Surge.
Yeah.
So there's lots of ways for investors, depending upon their risk profile and their portfolio needs. They can sit down and look at our names that we cover and then see which names fit their bill and then what price. And we always put in our research, what's a good recommended buy level, and
Yes.
what is our target in 1 year, and where is our target during this significant bull market that I keep on, talking about when I do my presentations for you. I want people to realize we're in a cyclical bull market, but corrections always happen in every market during the cyclical bull market.
Now, I'm going to turn to something else because, again, at the Outlook, you talked about it, but natural gas. Now, I'm not sure if I'm not getting biased because we've finally seen a federal government that has at least a positive outlook on natural gas. So I'm not sure if that's not coloring my perception of what's going on in that market. But I think, they've still got a long way to go when it comes to petroleum in this country. And this is me saying it, by the way, everyone, not Joseph, but I don't see any sign that there's going to be a positive moves on oil, especially with the emissions cap. No talk on pipeline, no reversal of Bill C-68, C-48, I think, off the top of my head. But natural gas, that's a different story. So first of all, you agree that we have a more positive outlook that way? And what is the sort of global outlook, at least for our markets in Canada?
Well, from the point of view of natural gas, the key thing is we have LNG Canada up. It's still going through the birthing process
Yes.
of getting up to 1 BCF, then to 2 BCF. We've already had FIDs on a couple more projects, the ones led by First Nations, which the Haisla Nation is doing for Cedars. We have Lassie Simis also moving forward. So all of those projects have buy-in from the province of BC, the First Nations of BC, and the energy companies that are backing them. So all of this is a positive for it. The key thing right now is storage is too high domestically. So we're sitting at 70, 80 cents for an AECO MCF if you haven't hedged. A lot of companies have hedged. A lot of companies have access to Alliance into Chicago, others into Ontario through Dawn, so they can get much higher prices. But we're kind of backstopped here until we start seeing more takeaway. And that's going to happen in 2026. We're going to see that happen. And we won't see those pullbacks like we do now during spring and fall, when we have these much lower prices because the day-to-day demand isn't there. That's what the U.S. market has, because there's everyday LNG tankers getting out of the Gulf Coast. That's something we need to start having, that regularly we see tankers taking it away. On the oil side, there is still a little bit of growth there because TMX is not running at full capacity, and TMX says that they can bottleneck, add some compression. So there still is a little bit of growth. And then, as you know, Strathcona bought up the rail car facility.
Yes.
So if we need to go back to rail cars, we can. Again, not the most environmentally safest way to move oil, but there is still takeaway away for it. So we'll see what happens. But I think the key thing people should do is we are the fourth largest producer of energy in the world. The United States is 23.4. Then you go to Saudi Arabia, 9.7. You go to Russia, 9.2. Canada is 6.2. Right behind us is China at 4.2. So we really are, from a security of supply point of view, we're not Russia, we're not China, we're not Saudi Arabia. So people around the world who are looking for the cleanest produced energy in the world, where the country is safe to get it from, that's why Canada has a lot of opportunity, assuming we don't screw it up.
Yeah, well, I'm not. I'm uncomfortable if anyone thinks I'm putting words in your mouth. I'm not. We have been screwing it up for 10 years, but
Yes.
I'll leave that. I'll leave that for now.
I'm from Alberta, so you know my view.
Yeah, but let me ask. Okay, so now let's address. The junior market, the mid, and the seniors here. Again, do you need different market pricing to make a big difference there? I'm talking as a stock investor now, that I'm sort of examining those. I'm making three broad levels, though, but I'm examining them. Is there a price level that makes a difference, or is it just strictly company evaluation at the time makes that a better buy?
Well, there's bargains out there, right now, but the key thing is they could get 10, 15% cheaper if I'm right with that
Yes.
we break $60 WTI. Then you make your decision. Do you want to own very large cap, natural gas like a Tourmaline or an ARC? You can make that decision. Or a Birchcliff. As you know,
Hmm.
Birchcliff has been, at your conference as
Yeah,
well.
absolutely.
So again, name that's familiar with your audience. Then you can go to the service sector, and there's, Total Energy is in there. On the oil side, there's, Surge is a nice size one, In Place a nice size one, Bonterra is a nice size one. So we've had a number of companies there, and that's why we provide the research that we do in our format, which is user friendly for individual retail investors, where we talk about something called balance of evidence, all the good things companies are doing, and also what are the
Yep.
concerns we have if there's insider selling, if there's too much debt, if their op costs are going against them. Those things we present to you so you have a balance of understanding why is the stock down? Okay, maybe it's because op costs have gone down. Maybe it was they lost some production because of facilities problems.
Yeah.
All of that is needed to make that decision. But once you decide, I want to own a Tourmaline, I want to own an In Play, then the question is price sensitive, and you want to take advantage of those market corrections, which happen all the time, every year. And even CNQ, the monster company in Canada, has corrections. And so, wait for those buying opportunities. We expect one during that fourth quarter, and we'll send out what we call an SCR action alert, so the subscribers will be able to, see what we're saying on the macro side, and then based on their own portfolio needs, size, dividend yield, liquidity, they can make the decision that what is appropriate for their portfolios.
Let me ask you, I'm just smiling to myself thinking of this, Joseph. You're going to say, I don't need to get on with that guy again. But if you were to look out 10 years from now, are we going to consume more oil or less oil than today?
This year, we're going to consume between 104.8 to 105.0 million barrels. That's
Mhm.
up from 103.8 in 2024. See, we're growing by a million to a million, 2 million, 3, depending upon economic success around the world, global trade, and
Yes.
other things. So we're going to probably consume 115 to 118 10 years from now, but it'll be lower in the OECD because of environmental issues, because of EVs and all the rest of it. But in the developed world, where we need the nickel, we need copper, we need lithium, we need grain, we're going to need so many things that Africa, South America, parts of Asia are going to provide for the needs of the rising economic demand from people all around the world. And the people are going to be in the copper mines and copper smelters and, nickel, lithium, all of that, they're going to want a decent quality of life as well. They're going to consume more energy, both for, electricity in the house, driving vehicles instead of bikes or motorbikes. So all of that creates that incremental demand, and the non-OECD is going to be the driver of it. And that's what's happening this year. And I think that we're going to see more of that as you head into that 10-year. So here's a real, fearless forecast. In 2008, we went from $80 to 147 because we had demand in the summer of 2008 greater than supply, and inventories were low. I believe in the next 10 years, we will exceed that 147 for the same reason. We will not be able to invest fast enough to bring on new oil. Second, inventories can come down if you have a good economic growth. And if they get down to low levels, number of days of demand, kind of thing like that. And then I think that's when you can have a pinch point and you could see much higher prices. You could argue today we're getting a pinch point for gold. Demand for
Yes.
gold is greater than supply. Copper, we had a mine go down, demand, pinch
Yes.
point there. So and uranium is going to be the same thing because there's not enough supply right now, and demand is rising with everybody saying, yeah, let's put nuclear back in the umbrella because we need it for data centers, and we're going to use more natural gas. We'll do more renewable solar, whatever. But the key thing is we're going to need more of crude oil and natural gas, and that's going to drive much higher prices. Spiking for natural gas could be to $5 or $6 for AECO. We might see Europe go to $20 or $25. Asia might go to 18 to 20. But
Wow.
again, those are pretty nice prices. So if we have access on the west coast to Asia, and also the interesting thing is Germany is coming up with saying we want to buy your natural gas, and what we'll do is we'll swap it with Korea and Japan and China. The cargo that's there can go to their country, but we'll take the cargo you bought on the Gulf Coast, and that'll come to us in Germany. So that's a way to do things, from the supply chain that gives you an opportunity for Canada to benefit, even selling into Europe.
If you're looking at individual companies, by the way, that was an excellent explanation. Individual companies, just some real broad characteristics. Are you looking at, cash rich, debt reduced, those kinds of things, macro things. And again, just as a broad overlay before you start looking at management, you start looking at their particular properties, et cetera.
So the first thing you look at is you want a balance sheet that's strong so that they have the ability to weather the good and the bad,
Yeah.
and you key the bad. So under 1x debt to cash flow is an important. Some companies have minuscule debt to cash flows like a Tourmaline. Then you go to the next thing is, do you have the inventory? Do you have the land base? Do you have the good quality drilling opportunities? Tier 1 inventory, they call it. And if you have 10 years or 15 years of that, that matters. And then the last one, if you're going to be able to contract natural gas to Asia or to the owners of the LNG, you have to have a long reserve life index, which means, you've got to have 20 to 30 years of reserve life. Tourmaline has that, Birchcliff has that, there's many, ARC has that. So you want to be able to provide the buyer of your natural gas knowing that they're going to, if they have a 20-year contract with the LNG company to deliver gas, that the gas is there, and it's just a question of bringing it on, putting it into the pipe, moving it to the LNG plant, cooling it off, putting it in, and then taking it to the country of demand.
Well, it's another reason why you need the expertise, to apply to whatever macro view you have. And you can do that at the SchachterEnergyReport.ca. But Joseph, don't go before I ask you. You have your own conference coming up next month, which is, to me, I guess you arranged it to have the timing so you could say, hey, I'm looking for that buy period coming up in a month. But just give me a quick lowdown on the conference you've got coming.
Yeah, we have a conference every year in October, and it's focused only on energy of today and the energy industry of tomorrow. So we have, energy E&P companies that are producing in Canada, E&P companies that are Canadian-based, producing all around the world. We have service companies, we have the royalty companies, and we have energy industry of tomorrow. So we have companies like, that are doing Tantalus, which is grid,
Yes.
upgrading the grid system for producing electricity. We have, two lithium companies coming. We have a uranium company that you may have heard of, Stallion Uranium. They're coming. And what we do is we have those, we have room sessions. People can pick where they want to go. We open it up with a political speaker. Last year we had Brian Jean. The year before, the Premier of Alberta, Daniel Smith. We're working on tying up somebody's schedule right now, so that'll be to be announced soon.
Yeah.
And then I do a macro presentation and then talk about how's the best way for you to spend your day. Then you go into meeting the companies. So people can come. There's going to be 39 companies in attendance. And the TMX is a major sponsor, so they help to invite the companies, so we get the great audience we want. The biggest company there will be Tourmaline. The smallest company might be Southern Energy, under 2,000 BOEs a day. Tourmaline, 640,000 BOEs a day. So we try to get a mixture of companies so that the audience has what they need. And the big thing is, because individual investors don't get the same IR, investor relation treatment, that the institutions have, this conference, just like yours, are the only ones available in Canada to get FaceTime for individual investors. How many people get a chance to go and talk to a Chris Carlson from Birchcliff, a Mike Rose at Tourmaline, a Marty Staples at Topaz? That's something that we provide here at ours and that you provide at yours that make them first class and why people attend.
Well, I think it's been a big success, period, because of that kind of access, that kind of expertise. And congratulations to you and your team for putting it on. We're going to put details of that, by the way, Joseph, on mikesmoneytalks.ca and our social media. In the meantime, they don't have to wait for that. They can go to, SchachterEnergyReport.ca, because you've got it right there too, but also, and then find out your latest thoughts. Joseph, always a pleasure to get a chance to chat. We appreciate you finding time.
Yeah, one more thing. I just mentioned that Money Talks hosts a room there, and our friend Victor Adair will be there with Grant hosting it. So if people want to meet the real Victor Adair and the real Grant Longhurst, please come and then also meet them in the Money Talks room. Thank you.
Great stuff, Joseph. Thanks.